What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 4th of 2017. Well, folks, today we're going to be doing yet another market history video here on the Data Dash channel, and it's going to be tied towards a question that many people out there in the Data Dash community ask me on a daily basis, and it comes in a variety of different forms, but I'll tell you that it usually comes along the lines of something like this. People ask me, Nick, is Bitcoin or cryptocurrencies as a whole in a bubble? And I think that this is a very interesting question to ask because, quite frankly, if you ask me about my long-term opinion on cryptocurrencies, I think the meme of we're going to the moon is not so much of a meme. I think if you want to talk about long-term valuation, cryptocurrencies are going to go to levels we can't even comprehend. I think in the long term, they will replace fiat currency. I'm a little bit radical in that sense, might be a little bit out there, but that's personally my belief. I really do genuinely believe in this technology, much like the internet or the different types of electronics we use on a day-to-day basis. I feel blockchain itself is going to revolutionize the way we think about not only finance and money, but also a variety of different industries that had traditional ways of thinking and traditional ways of centralization. We are now going to be decentralizing so many industries, implementing new technologies, and taking a new approach to so many different things. However, that's not the question we're asking here. We're not asking as to whether or not Bitcoin or all these other blockchain or alternative decentralized applications or decentralized cryptocurrencies, what their worth is in the long term. We're asking about whether or not the valuation that's given to it right now, or maybe in the next week or month, is really justifiable to what it's producing. And this is a fair question to ask. We always have to ask this as rational traders and investors as to whether or not this technology is getting too much hype too quick, and if it's really seeing the innovation and adoption that it needs to become the revolutionary technology we all know it is. Well, again, with everything, I try to take a unique spin to things. I try to bring back a sense of history to where we can correlate this kind of question with something of the past. And we can get some pretty clear answers if we take a look at a major event. And I know many people were happy I didn't use this as an example for my last market history video, but I have to use it in regards to this question. It is what's known as the dot-com bubble. Now, the dot-com bubble, if you can already tell from the term .com, refers to the internet, and it refers to U.S. stocks during, actually I think in a global sense, it wasn't just the United States, but mostly predominantly in the United States, the innovation of technology companies on the web. And a lot of people got excited when the internet came around. Once it got out of its kind of early 90s phase and started to get towards the late 90s and all the way up to 2000, many people started seeing mass potential in the internet, and everybody wanted a piece of the action, or at least investors did. So you had this run-up in the NASDAQ predominantly out of all indicators. All indicators saw a great run-up going into 2000. But as you can see here, the NASDAQ multiplied its value almost 10x of its value back in 1995. It was one of the greatest bull runs we've seen in history. The amount of valuation that was granted to these stocks were out of this world, more than what we're seeing with cryptocurrencies. This was talking trillions of dollars in valuation coming up out of nowhere around the hype and the almost nostalgia for innovation that the internet was bringing back and the potential that laid under it. And I think at that time, practically all of us knew, and this is why valuations ran so high, was the idea that the internet is going to change things. No one was really debating it. It was a question, as we saw the correction and the slowdown in the bull run, of whether or not the hype and the ambition to start utilizing this technology was a little bit forthcoming. Maybe it was not, the technology and the adoption and the potential wasn't really there yet to meet with all the hype tied to it. And that's exactly what happened with the dot-com bubble. You saw a lot of this valuation granted out to tech companies, predominantly internet companies, evaporating within a split. And we can go back and, to really get a visualization of this outside of a chart, let's go ahead and take a look at some of those dot-com websites. GeoCities. You guys remember GeoCities? Big website. I don't know anyone who uses GeoCities. I don't think it's even around anymore. But it's You can go through and you can see on here they have all types of different definitions of how they rebranded. Some are still around, maybe lurking. I think there was a few that got, successfully bought out. For example, Mark Cuban's broadcast.com, which was going to pretty much bring radio streaming and stuff onto the web. They sold it later to Yahoo. So some companies had successful exits. But in this case, we have to ask if the technologies that were created, the companies and the brands tied to them, and their approach are still around, and many of them aren't. Napster, no one can use Napster anymore. It's gone. InfoSpace, we're now rebranded as Bluecora. I mean, even Bluecora itself, not too many people are familiar with. You go down the list. Lycos, not used anymore. Alta Vista, Yahoo. We could talk about adoption to some degree, but you get the idea. Pets.com is probably the biggest example that people list out, but I could list out dozens of IPOs that I've learned about. I've studied the dot-com bubble pretty extensively because I've met individuals who were institutional investors at the time and how, oh man, they were having a blast. Everything was launching up 40 or 50 bucks a share each day. They got rid of their shares and it dumped right back down, but man, did they make a killing. Sounds a lot like what we're experiencing in crypto right now. Things are the next Ethereum for one night, and then they're caught behind the list past the top 100 or 200 cryptocurrencies, and they become eventually forgotten. Whether or not their technology was revolutionary, the adoption goes away. And these websites, pets.com, as we go down the list, there's even more that they didn't even mention on here. This was just a nice little article that CB Insights put together. But if you were to really do your deep research, you could learn how many ridiculous IPOs there were. There was a lot of new tech companies having their initial public offering onto stock exchanges under the NASDAQ, where they would, launch and get these ridiculous valuations for simple things. I remember in the book Dumb Money, it was the story of a day trader during the dot-com era. He was writing about an IPO for a company that all they did, and you've probably heard me mention it before, all they did was sell chocolates online. Little bit crazy, and not to mention the valuation that met with it was hundreds of millions of dollars, if not billions. It was ridiculous. So you have this kind of hype phase where everything, it doesn't matter what it is, it's on the internet, it's good to go, it's revolutionary, it's going to change the world. Not quite. And this was a time where the internet was dodgy. You notice how none of these websites or Facebook or Twitter or anything like that, those came later on in the internet. And this is where I try to bring up the idea of, how to comprehend whether or not cryptocurrencies are a bubble. A bubble is a very harsh term. People get people who are optimistic on something get very turned off when people use that. They get very, almost ticked off sometimes and a little bit insulted. How dare you say what I believe in and what I see potential in and I know there's potential in is a bubble. How dare you? A lot of people will say that. But I want to show you this chart. So this is the NASDAQ right here. This was the dot-com bubble during the 2000s. And a lot of this was from the internet. We could see that it sold off afterwards. And a lot of people would say, well, what happened after that? Well, we all know what happened. The internet developed. It became more mature. And we started to actually see the value and potential come into fruition. Now, of course, the NASDAQ isn't just internet stocks. To be fair, there's other stocks involved. But a lot of this valuation has come from internet companies. Facebook, Amazon, Netflix. I could just list off dozens and dozens of them. Not to mention, technological applications that couldn't have survived on the internet back during those early days. And this is what we have to consider with blockchain. That not even just with blockchain, with cryptocurrencies in general. Some cryptocurrencies aren't using blockchain technology. We're very early on in this market. Much of what we see being highly valued, I'm not arguing against Bitcoin per se, but more cryptocurrencies, might be a little overvalued with the supposed innovation that it brings. And we can see this over time. Coins come and go. When anyone can create a cryptocurrency, valuations can come and they can go in an instant. This was back on April 28th in 2013. This is the latest snapshot that you have on coinmarketcap.com. Sounds like a while ago because a week in cryptocurrencies is like a year, as we've said on the channel, a year's worth of price action. This was really just a little over 4 years ago. I remember looking at Bitcoin when it was at $3 or $4. It was something so new at the time. No one really understood it. But it was something. It was there. And we can see a lot of the coins here back in 2013, outside of Bitcoin and Litecoin, really aren't valued that much. I know some people probably might know Purecoin or Namecoin. And if we even, let's jump a little bit ahead here. Let's go back to maybe, now I'm probably just being a little cynical here. But let's go to August 30th of 2015. Oh, we're starting to see a few more familiar names. We have Bitcoin, Ripple, Litecoin, Ethereum, Dash, Dogecoin. Banks, you guys heard of that one? Many people haven't. Namecoin still there. We go TRMB, YB Coin. I hope you start to see what I mean in this sense. I've talked about this on my trading tip series. There's a lot of coins that will come and go. It just happens, especially in something so new. And this is what I want to bring up as a risk, to cryptocurrencies right now. A lot of the altcoins, more than anything, have, and I would say this is a rough estimate, of course, but most altcoins, around 90 to 95%, have either ripped off source code from Bitcoin or Purecoin, which was the first proof of stake coin, and rebranded it with a new logo and a new name and a few minor changes. That's really all they've done for the most part, for the mass majority of altcoins out there. And altcoins make up a lot of valuation. They really do. $150 billion of this run-up is altcoins. A little less than 50% of overall market capitalization is in altcoins. And the question comes when you see, ICOs flashing up everywhere claiming to be the next Ethereum or the next Bitcoin, or they claim that they have some revolutionary technology when many of them don't. And many of them are holding tens, hundreds of millions of dollars in valuation, if not billions. You have to sit back, really think about it in a logistical sense, and ask if this is in a bubble. I will say that, like I said, bubble is a very harsh term. I think the valuation of cryptocurrencies are going to go much higher over the next few decades. It is going to be the greatest run-up I think we will have ever seen in history. I really do believe that. But to be fair in regards to those concerns about a lot of this run-up being kind of phony or false on, promises from technology or ICOs that claim to be really different, many of them don't have the tech, many of them don't have the team, and many of them don't have the real course or timeline to set themselves up for long-term adoption. Because, to be quite frankly honest, it's hard to make innovation, and it's hard to know what's going to be adopted 5 or 10 years from now with how fast things change. Now we're even at questions, for example, if we look at the top 10 as projects like IOTA and Cardano, and I know Hashgraph and all these other alternatives are either proposing different alternatives to blockchain or adding entire components that Bitcoin and Ethereum don't have, like Cardano with systems of governance, and really kind of taking into more of those long-term things into account. So it's very important to ask those questions and to invest in cryptocurrencies that do have that long-term potential set, that aren't just set for tackling one market or taking the Bitcoin source code and rebranding it. It's a very important thing that we do this as investors or traders, because we don't want to get caught with the 90 to 95% of bad apples that are going to collapse. Not to mention, I think some people would even, I know Andreas thinks that I think about 99% of altcoins are going to go away because anyone can create them. With 1,300, you're going to tend to get a lot of bad apples. Anyone can go out there and create a cryptocurrency. And because of that, you have to know to look for the right one. So people ask me in summary, if this is a bubble, Nick, if this is something that I have to worry about and I want to secure myself in the long term, how do I find great projects? How do you do it, Nick? How do you use your wizardry powers? Guys, I'm no expert in the space, I know we have a channel and stuff that's done very well, but I'm just like you and I. And even if I was an expert, just because I have my way of doing it doesn't mean it's the best way for everyone. Some people have made calls that I haven't, and they've done quite well. And it's really not hard to find good coins, much like it isn't hard to find good companies. It depends on your research and how you do it. I look for quality teams. I look for teams who have worked for projects in the past or companies that I believe in or have seen success in, and they've been responsible for some of that or maybe played a big role in it. The other thing I look for is actual revolutionary tech. I can read as to whether or not something is just ripping off the source code of previous projects. And there's nothing wrong with taking pieces and components from previous projects, but the question is whether or not it's enough innovation to really push towards being something that I can see in the next 5 to 10 years when blockchain really takes off and when market valuations are at trillions of dollars, that coin succeeding in the long term and me getting into it now as a benefit for myself. That's the real question you have to ask yourself here with these kind of things, is if you can see this getting adopted in the long term. Will this last 10 years? Does it have the the kind of checklist of standards that it needs to meet to be long-term, have long-term adoption and really have a place in this amazing market of cryptocurrencies? To the question of Bitcoin being a bubble, I don't think Bitcoin's so much a bubble. It could have a correction like I've thought it might have for quite some time. But I still believe Bitcoin's got a long way to go. So I hope that kind of generally answers the questions that many of you out there were wondering about. And the dot-com bubble is not the only one. You've got the railway bubble. And I know many people bring up the S-curve of things. But with every great S-curve of adoption, there's usually a pre-hype up in the market. Railway bubble or railway mania, as many people would call it, on the London stock exchanges when railway companies were going public. Before we saw mainstream adoption, we saw massive run-ups in the market and then massive sell-offs. It's tended to happen because people usually get more hyped up about things before they really come into fruition, and it takes time for innovation to really get implemented. Not to mention the adoption that's needed to make that innovation worth anything. All right, everyone, that's it for the video. Thank you all so much for watching. I hope you all take this in a bright perspective. I don't mean to be negative on cryptocurrencies in any sense. Just saying, there is a lot of, I think, a lot of filtering that needs to come into the market, a lot of garbage that needs to get dished out and forgotten in the past. I think we see that, honestly, on a daily basis. There's a lot of cryptocurrencies that were in the lead, and now they're going, well past the top 100 coins, and they're just going off into the dustbins of history. Some projects could be down here and they could be undervalued. Who knows? But it's really a question of how you want to research these projects, what you see as a good project, and what you determine is set up for long-term adoption. All right, everyone. Thank you all so much for watching the video, and I'll see you all in the next one. Stay tuned.